Hey traders, Raghi here, and in basically preparation for tomorrow, we're going to continue to talk about this breach retreat long bias that we're going to operate with tomorrow. What I want to talk about here is just go through all four of these with you all, just because the setup is nearly the same every time. And because I'm not looking for shorts, this is basically going to be one of just a handful of things. One, maybe there's a 5 or 15 minute breach, which would only be valid if we have 3 to 5 yellow or green propulsion dots. We'll talk more in detail about this, but what the yellow propulsion dots are telling us is that the 8 exponential has crossed up through the 13, or that for the green, that the 8 exponential has crossed up through the 21. And this gives us a good look at some momentum. Right now, sometimes we might get a 3 crossing up through the 8, and that might be a momentum cue, especially if we have a breach. We'll see what we get. But, a lot of times what I'll walk y'all through is just whatever we have access to on that given morning. But the setups do not vary. They are, we're looking for the same type of visuals, the same type of timing, the same type of tool day after day after day. So if you've been with us for a few sessions, if you've been with us for a few weeks, you know that the tools are going to do a lot of the heavy lifting for you. That's really important to know, that the tools are going to do a lot of the heavy lifting for you. Meaning, especially on the Thinkorswim platform, which most of you are on. I know some of you might be using Thinkorswim charts and Infinity execution. That's absolutely fine. I'm sorry about all the squirming. Some of you might have heard we have a puppy, and she's kind of like decided to invade the office today. Definitely a no-go ground for her, but you can't tell a 10-week-old puppy what to do, can you? All right, so anyway, the idea that, again, the NQ should go first is another one. So for those of you that are wondering, Rug, if the S&P and the NAS are moving together, even if the S&P hasn't given us all the cues that we'd like, can we still trade it? And my question is, well, why? Why persist in a market where you don't have an edge? Now, again, is the S&P going to largely do whatever the NASDAQ lets it? Absolutely. Let's talk about an exception, and then we'll go into all the individuals. All right. If the XLF and the XLV, so we're talking about the ETFs for financials and the ETFs for healthcare, if those two are moving in a way that is opposite of tech, it will allow the S&P to potentially break free of whatever it is that the NASDAQ is going to say it should be doing. In other words, tech is the heavily weighted sector. But if we have a situation where the market is able to basically buck that trend, and in this case, because the financials and the healthcare sector are allowing it to, then we could have an opportunity to play the S&P in a direction that the NASDAQ would not permit or may not be going. All right. So again, the XLF and the XLV have to be moving together to compensate for, say, a laggard NAS or a weak NAS if we wanted to buy the S&P. All right. Now, here's another way you could use this. If tech is rolling and financials are rolling and healthcare are rolling, they're all moving together, they're all rolling together, you're going to find that the S&P may actually outperform. It may outdo the movement on the NAS. And the reason for that is all of the sectors are firing together. Imagine like a 3-cylinder car. There are motorcycles that are 3 cylinders, but imagine a 3-cylinder car, and that we have all those cylinders firing off together. Now, if you have that, you'll see sometimes the S&P is going to be a whole lot froggier, up in green if your NAS is higher, so your tech's strong, financials are strong, and healthcare. So keep that in mind. All right, so since we're on the S&P here, let me break this down. And got the puppy out of the room. Okay, so the S&P broke higher on the 30-minute. Now, when I refer to a 30-minute clearing range breach, what I'm talking about is the first 30 minutes after the bell, 9:30 to 10 a.m. Eastern. When we take out that high, that's known as a clearing range breach to the upside. That's what I'm looking for. Now, I don't like buying the actual momentum through the breach, although you certainly could. A few folks asked me, hey, Rog, once we got the second red dot right there, could we have gotten aggressive? Yeah, technically you can. Technically you can look to buy any low that you can after the second red dot appears. Aggressive, but for those of you that are fluent in propulsion, it should not be a big deal. This right here was a very interesting zone. Let me show you why. And I've got to go to the S&P. I've got to go to the NASDAQ to show you why. So here's the NASDAQ, same thing, breach, 2 dots. There's your quick move to the upside. I'm not talking sustained. It's usually like a quick blip of the throttle, if you will. Then we had a initial balance breach. What that means is that the 60-minute high-low, 9:30 to 10:30, that high-low was taken out. So we have the 60-minute breach. It wasn't much, but there it is right there. And then there's your retreat. That will happen at 11 a.m. Eastern. Well, if the NASDAQ is coming into a setup that I call the initial balance breach to VWAP, and this is a buy, right? I'm not looking at shorts. Initial balance breach to VWAP. If I get a setup that's giving me the opportunity to be a buyer, well, then I could additionally, not in lieu of, but really additionally, have a setup in the S&P. All right. Now, the important thing to remember about setups in the S&P are basically this. They really should be in agreement with whatever the NAS is doing. Ideally, they're in agreement with whatever the NASDAQ is doing. Again, unless that financial and healthcare is compensating. But I'll tell you what, I've seen days when that's happened, and the S&P still succumbs to the weight of tech, because tech is just such a leader right now to the upside, and tech is such a heavily weighted part of really the Dow as well, if you take a look at the Dow weighting. So when the NASDAQ is a buy, the S&P can be a buy as well. Now, what about the Dow? Here we have, let's go back to the 30-minute. And you notice I'm just toggling the breach length minutes here. All right. So breach, right? We're open to being a buyer here. And then we're looking at a potential retreat. Look, as long as the market remains above this level right here, which is the clearing range low, that's the low that we established from 9:30 to 10. As long as we stay above the clearing range low, we are still in buy mode. We could be buyers aggressively off the VWAP, off the Fibonacci zone, which is all of this, right? Or the bottom of the range. I mean, so that distance from the very top to the very bottom of the clearing range, that's your risk. And the lower you buy, the lower the market goes before you buy, the less your risk. Why? Risk here being defined as the distance from your entry to the point of validity, or your stop loss. All right. So again, buy bias only. Finally, our Russell. Taking a look at that. Same idea, 30-minute breach, retreat. Now, a lot of folks have asked, Rog, is the VWAP zone after the initial balance breach and the clearing range zone, are they both valid after 10:30? And yes, absolutely, because again, anything above the low that we established between 9:30 and 10, and after an initial balance breach, any low that we established between 9:30 and 10:30 is still valid. So take a look here. Here's my VWAP. Here's the Fibonacci zone for the initial balance, which is the first 60 minutes of the day. And you can see we're still well above the point of validity. So these are just all different ways to get long. Now you might say, well, Rog, if you're telling me that all of this is risk, well, I can't afford, or I don't want to lose, in this case, it was pretty small. I don't want to lose 10 points. I don't want to risk 10 points or more. No problem. This is where I say to play the options. You can play the IWM options in the case of the RTY. You can play the S&P and NASDAQ futures options. You can play the SPY, QQQ options. You can play the DIA options in the case of the YM. So if that risk is too great, think about the option on the futures or the ETF alternative or micros, which are 1/10 the size of a mini. You could pile into maybe, what, I'm not going to tell you how many. You need to sort that out for yourself. But you could put literally a half a mini on with 5 micros. So there's a lot of ways to do this. Yes, my primary mode right now is still day trading. Now, as we go through the week, gang, let me just kind of mention this. I am anticipating some window dressing from the brokers. I am looking at the possibility of a pullback as they look to raise cash and then park that cash with the Federal Reserve. That's not going to surprise me. I'm not going to be surprised by larger than normal redemptions at the end of this month and quarter. So, pensions and retirement accounts. So there's a lot of things that I'm looking at for potential weakness. Now, that's going to take us to the daily time frame, and that's going to mimic what we did this past Monday, which is, are we going to get a daily time frame pullback? And if we can get something like that, a daily time frame pullback, then I'm all in on another round of call options on the pullback. Depending upon the way in which we pull back, depending on the timing with which we pull back. You'll remember I waited 2 full sessions. I didn't buy on the Thursday pullback, that big sell-off day. Didn't buy Friday, we bought Monday. So we'll work on the timing like that, but I will be looking to do something very similar if we get that move. All right, gang, that's tonight's premium video. I'll see you in the next update.